Start again. Welcome, everybody, to the TriggerCharts pre-market rundown for Friday, May 1st. It's the 1st of May, 2020. Thank you for joining us. Hope everybody's doing well, getting through this. Maybe some of the openings, the grand reopenings of your states are happening slowly but surely. But it is, it's been fun. Not really. Well, we're going to talk about a variety of things. One of the things I want to share with you today is some of the shapes that we have. And you'll understand that in a minute when we talk about radar, market profiles, and what they look like, and the reasons for understanding how different shapes, like a P or an L or a B, a capital B, a small b, all these things work when it comes to looking at price and volume when it comes to markets. Because remember something, one of the things that we're doing here at TriggerCharts is really trying to look for those areas that are significantly important when it comes to levels of support and resistance. We utilize those areas from the idea of where institutional investors are placing their bets. That's really important if you think about it, because we're not talking about just 100 shares or 200 shares being bought in the market. We're talking about massive quantities and where those institutions are looking. Oftentimes they look at something as simple as a 50-day or a 200-day moving average. But more important than that, where are they all coming together? What level? And we could see that through kind of a infrared look of the markets with our radar. And we're going to get to that in a second. So let's start with, first of all, where we are here. We'll keep on looking at the SPY, in particular, looking at the areas of the Fibonacci to the right. And we'll talk about that in a second. Before we go any further, I want to mention this discussion is for educational purposes. Investing includes and involves substantial risk. This is not a recommendation to buy or sell any security at all in any way of any kind. I want to make sure everybody fully understands that, because we are not making recommendations on securities here. We're not telling you when to buy. We're giving you education on how to use the tools, techniques that so many traders really use on a regular basis for TriggerCharts indicators. And I will share with you that a lot of times we've received emails like, how did you get that price? It got exactly to that level and moved exactly as it was supposed to. Either bounced off support, it got to resistance and bounced down, or blew right through the area where there was a hole. How did you do that? Well, there's no magic in this. It's very simple. The simple idea of supply and demand. That's what's going on, and that's why we develop these. So it makes your ability to have confidence in a trade and understand where we are in the cycle of a trade for a security, like an ETF, a stock, possibly even futures or Forex. Any particular security works really well with this that has volume, and you can test it out time and time again. The whole point of this is this. You want to have confidence with the trade. The worst thing that can happen is you enter into a trade and you're like, oh, I'm not sure where it's going to go, and you get out too early. Or you stay in too long because you're like, oh, I lost money on this, and what am I going to do now? Well, what I'm going to do now is hold for a while. Wait for it to come back. All right, so let's get to some of the things that are moving markets this week. April, another historic month for the markets. We saw a historic month in March, and then we saw a historic month in April, basically giving us one of the best months, the best month ever for small caps for a monthly return. Some of the best months going back to like 1974, 1987, depending on which particular index that you look at. So we saw a trifecta. Basically, that trifecta was, we saw a treatment drug. The Gilead has a treatment drug that has gone through trials, and there's been a bit of a hit or miss discussion in terms of the efficacy of that trial and how it's really working. But nonetheless, there is, at least in the thought process of a lot of investors, the idea that there is something out there that can shorten the span of time between when I'm hospitalized and when I get out, and possibly help with the overall implications of the coronavirus, therefore slowing down deaths. Now, in the study, we did not see a really significant amount of mortality change, a slight difference, but again, we need to do a much larger study for that. Gilead, nonetheless, is pumping it. The administration is pumping it. They want to make sure everybody feels a little bit better about what's going on, and I don't blame them. I want to feel better about potentially going out. I'm sure you do as well. The thought of being cooped up, not being able to go out and socialize, do the things we need to do for business, just go out and just be ourselves. As human beings, we are a social creature. We want to be able to do what we want to do. The second thing was Fed stimulus. Clearly, not only continually telling us that they're all in, but not only all in, they are not even, as they tell us, they're not finished. I don't know how much more they're going to actually include in all this, but the truth of the matter is that they are buying everything possible to try to pop up this market, whether or not it's justified or not. So we're seeing a lot of that go on right now. And we have the grand reopening. We saw that Georgia is opening and a variety of other places around the country. We see some things happening as well to the other side, whereas California opened up their beaches. They got too crowded. They shut the beaches down again. So we're going to kind of go through this start again, stop again situation, I think, for a while. What else do we have? Earnings better than feared. Take that with a grain of salt. A lot of the earnings that are coming out right now are for the first quarter, which ended pretty much March 31st, give or take, depending on the company. And with that in mind, you have to realize something, that a lot of companies got hit, but they were able to manage like a couple of weeks of the downtrend in the coronavirus, and analysts guided down or cut their overall estimates pretty substantially. So when we see companies beating, be very careful, like we saw with Twitter. Twitter was up 11% on the post-market update of their earnings, and only to fall a total of 9% the next day, yesterday. We're seeing some weakness in Amazon and Apple today, probably because traders are like, you know what, this is maybe as good as it gets right now. And they're thinking that with that, let's take some profits. We're seeing that the futures are down 440 points on the Dow, 59 points, 60 points on the S&P, the SPOOs as we call them, and the Qs, or the NASDAQ 100 mini futures, are trading down 206 on that weakness overnight with Apple and with Amazon in particular. Markets are definitely running on every story. Just be aware of that. So the S&P, we got to a 61.8% right here. I'll give you that in a very big area circle. Look at that. We hit that right there. Got right to it, almost exactly right to it. If we can magnify that, you would see. And maybe I can magnify that. Let's see. Can I magnify this? There we go. Got right up to it right there. And from there, we basically got, let's see if I can draw this here, a bounce down. And right now trading probably down the SPY at 248, excuse me, 284. So we're trading right about this level right here, right now. Right to where that breakout happened just a couple of days ago. All right, so otherwise, there's a question about what's happening with, well, we got to get back to economic in a second, but is Crude going to go negative again? Right now, the June contracts are doing their best to keep a higher move, close to about 19 this morning. There's some story yesterday about President Trump telling Saudi Arabia, hey, you guys better cut your crude production or we're going to withdraw military support for you. Now, in all fairness, that was a replay of a story that's something that happened on April 2nd, not recently. So that just came out. On economics, we have about another 3.7 million people filed for unemployment claims yesterday, and about 30 million people overall. The unemployment rate is somewhere about 17, 18% right now. We'll see those numbers next week. Let's see what else we got here. Rebalancing may work against markets in the coming week. What I mean by that is that last month we saw the rebalancing definitely help markets because stocks were down so significantly. So the rebalance from stocks to bonds and other asset classes really helped in the beginning, the end of the month, and the beginning of the month. This month, because we saw that incredible outperformance by stocks, we may see the exact opposite happen. The worst of the best. So the biggest hit companies in leisure and travel really did pretty well over the last several weeks. Very interesting turnaround right there. In economics, the Fed, let's bring that back up. In economics, the Fed had no change in their overall decision-making. Consumer confidence falls pretty low. We had personal spending basically dropping off a cliff, not unexpectedly. And we have a clear deflationary signal. In fact, the PCE, which is the preferred measure of inflation by the Fed came in at a negative print yesterday. So we have deflation starting. Again, not unexpected because nobody's spending. Nobody's spending. Well, we have deflation. So it's a big issue. I mean, yes, they're buying household items, they're buying all that, but they're not going out and buying a lot of discretionary types of assets. And because incomes are lower, they're not able to spend a lot more, therefore taking prices up. So the whole argument for inflation right now at this exact moment is a little bit questionable. I think, though, that if we do get, listen, if we get a virus cure right now, this moment, snap your fingers, we got a cure. Inflation on the other side is going to be out of control. Reason being, everything goes back to open, the light switch turns on, everybody's happy to go out, and the incredible amount, I mean, I don't know how much stimulus we have, 12 trillion, 10 trillion in the system from not only the Fed, from the fiscal side as well, from the government, tax benefits, unemployment claims, insurance that came in, the checks that came in, the stimulus checks, the PPP program, the CARES Act, all that. And then what's going on in other countries around the world with this cash pushed into the system will create some inflation. That's down the road a little bit. Next week, we have factory orders. We have productivity, which will be important to see on Q1. Again, it's Q1. A lot of these economic indicators are going to take a little while to start catching up to the reality of what went on during this lockdown. We see non-farm payrolls, unemployment rate also next Friday. We'll talk about a variety of stocks as well today. Before we do that, I want to go through something else. Let's take a look at this. I want to show you something. When we talk about, and let me bring this up on a chart first. I think this will be really good to do, but let me bring this up on a chart first, and let's go over to the Commander series, what it looks like here, and let's enable to study the radar. So you see this radar, this is a granular view of a market profile. We call these profiles. Basically, this is something that was created by Peter Stoudemire a number of years ago and basically created this idea of a range of where the volume at price is. And when you take this and look at this, we can see where the significant levels are on a range. So right now we're seeing color coding that we put in there because we thought it would be much better to look at this in a color-coded way. Yellow indicates a high volume node. There may be more than one yellows, and that helps you identify what shape you're in. For example, there's only one yellow right here. See that? There's only one yellow. Let's take off the autopilot and let's take off the altimeter. Okay. So you see in this range right here, we have one yellow that's in that whole range, a big block up top. Well, that would be the equivalent. Let me kind of draw this for you. I think it's important. And you can use various drawing tools as well to take a look at this. But you look at, it's a P. See that? You see the largest amount of the yellow there. This is kind of a weird, I would say, see that? A B. This is a small b. See that how that's progressing? So you have different shapes for all of this. Now, let's get back to a couple of things that I want to show you and really focus in on where these really make sense. And one thing that we've seen recently that I haven't really seen before at this level, you could look at this shape. This is Norwegian Cruise Lines, NCLH. Norwegian Cruise Lines, since the February drop, came straight down, right? Look at this radar. This radar just has a conglomeration of volume at price all the way at the bottom. Only at the bottom. See that? All the way at the bottom here. This whole range goes straight down, and then it goes out like this. This is an L. You don't see these very often like this, unless maybe there's a company going out of business, maybe a trial for a drug that just goes bad. It usually would look like a B, right? Usually what you'd see is that you would have a B shape. So let me kind of get that here. You got kind of this, you get usually a B. You could say this is a small b, but really this is so incredibly sharp that it's really just an L. And I think that's really interesting because what is that showing us? What is that telling us? There is something that says very clearly. Number one, it's telling us that there's a lot of support at these bottom levels. So when we draw a line and we look at this and we just kind of come over here and say, okay, well, that level right here, there is a tremendous amount of support on the bottom there. That's number one. Number two, I say, well, if there's a lot of support, then that could be an area that I will look for, even though this is a really horrific looking chart, to enter a position looking for if it does break up, well, what happens next? Well, if it breaks up, there's really not a lot of volume in this area here. So if we get above the area, I would say right about here, which we did, you may see a significant break higher. That's what's going on and what we're looking at right now. So what happened is once you got that break right here, look at this right here, you got that break. And then we got a follow through. So we're talking about a move from 11 up to like 17. That's like a 50% move in 3 days. Now, where do we go from here? The problem is you also have not a lot of support. You probably have support right here. Let's kind of draw a line. You know what? I'm going to do something better than that. I'm going to bring it up here. NCLH. That didn't work. All right. So let's zoom in on this really carefully. And we can see that probably we have this nice level of move to the upside here, right? And more so, I want to show you something. Okay, we have, here. Okay, what happens here? Well, we know that if we can get above this level here, major amount of resistance over the period. We get above 1755. Right now, it's trading down about 6% in the early goings right now, before the market opens today. As the market's coming down, we saw it come down to 1464, bounce right back. You get above this level here, probably close to about 1798. There's nothing to the left. We always talk about looking left. There's nothing right here. There's nothing at all going on. So when we look at this, we could say that the potential for a move up to 35, as crazy as that may sound to you, is very real. Okay? So with that in mind, let's get back to what we were showing you here. So that's the L shape, okay? Here's some P and D shapes. So this is Twitter. See the P, we have one line at the top here, or at the top of the entire range here, and nothing on the bottom. Think of it as an upside down B. In other words, if we get below this level, there's not a lot of volume that people are putting stocks orders or buy orders in, and it may fall precipitously is what it did. Reverse is true when you get through there. We have a D pattern right here, a capital D pattern. And a D pattern has this is what we call almost a normal distribution, right? If you think about a distribution, a bell curve, and look at that on the side, but turn that upside down, it's pretty much a standard distribution where you have the spike in the middle and it falls out on either side, right? It kind of just goes down either side pretty well. And the spike right in the center. So that's what we have here. This is a normal distribution. Inside of that, you get a lot of movement in a consolidation pattern in between, and then it breaks up to the upside moving forward. So that's what you have with that. So I think that these three, and then you get the small b as well, you get the capital B as well, they tell you different things. We do have some training over on TriggerCharts.com under our tutorials that talks about the radar in particular. And the reason people like radar is to get further confirmation. What I do is I usually take radar off my charts. I'm looking at my charts, and when I go back to looking at my charts, what I do is I turn on the radar if there's something that I want to find further granularity about, a little more detail, really getting into a look at what's happening. So kind of look at that as an area where you can get further confirmation. So I kind of like look at it like this. Then I kind of take my studies, I enable it, looking at it always like this, saying, hey, what happens in this range here? If we can get above that, 17.5 range, I tried to do it here. Well, then I'll just take it and I'll turn on my radar and say, hey, you know what? I have nothing going backwards either. I got this tip top right here that I need to worry about, kind of at the 19 level, but over 19, it looks like it's really clear. And then you get above here, you're going to get a short squeeze like you've never seen before. So just keep an eye on looking at that. We'll leave the radar on today as we're looking at things going forward. So do me a favor, put your, I'm going to write the word here. Put your symbols in if you want me to take a look at it. Somebody had a question about the SP, is that SQ9? I don't know what SQ9 is. SQ9? James says, howdy, Andrew. I know I missed it. We'll take continuation of SQ9 looking for destination above. You're talking about the SP, the 9s. Let's see. You're talking about this, the SE, these. So right now, this is the SPOOs, or the S&P 500. The SP, okay. Yeah, this is right now we're getting down to support today. We got some decent support here. You start getting below the level of about 27.45. You got to look again. You know, we're looking at where those holes are, and there's a bit of a hole right here. Then you get support back down to about 28.50. SPY also looking at getting down to what, 285 today. Is that 285 or 283? 285. 285. So we're still trading above right about here where that nub is. See where that nub is right there? So I'm going to take my radar off. I'm going to look at this. What does that mean? 285. I would say that, you know what, we have a really good point down at about 281. And markets are going to try to move up. They're moving up already this morning a little bit on this. They're trying to, you know, see if they can squeeze up before the bell opens here. Probably going to see a roll down after that and a lot of choppiness as the beginning of the month starts here. Let's take a look at oil this morning, trading up 6%. Nothing really going on there. Gilead, let me go to here. Microsoft, Tesla. Let's look at Tesla. Tesla staged an impressive reversal yesterday. Let's go here. Let's kind of bring this back. Tesla trading down 20 bucks today at 761. So right now, you look at about the 783 as a level that was important. 761. You can probably get down to 723, I would say, on Tesla. There's some decent support line going across. Again, if you want to just take it and turn on your radar and see what things are, well, there it is again. You know, 713 is a level right there. That's kind of important. But again, I think 730, right above that where we have that. Below that, you got some problems. So below this area, and I'm going to show you what you could do very simply inside of TradeStation. You can grab a box tool and you can look that, you know, kind of in this area, there's nothing right there. You look backwards, there's nothing. So Tesla really needs to hold this, I'll call it $700 level. And then if not, it kind of gets a little bit wonky. So to keep that in mind. We had Microsoft actually come out too. A lot of these big names were just riding up forever and then just turned around. You got some interesting kind of chunky distributions here. So Microsoft, even though it's down about 1.5% in the pre-market right now, got a nice lift on its earnings a couple of days ago. It's probably still the 172 level. That is something to watch for on the downside here. Not a long way from where we are right now, but again, something to take a look at. I didn't really port these over today. So we got NCLHQ, IBM, Dell. So let's look at Love, some of the airlines. So the airlines here. This is another interesting, this is a B. I guess we can call this maybe an L, right? Let's kind of draw that, shall we? Let's just take a little drawing. Look at, this is an L. So you get this range right here is a real issue for this stock. Once you get above here, probably in the 30, call about the 33 level, you may see some opportunity, but you really need to clear and get above. I mean, in this, I would really like to see you start moving up above this line, our point of control here, and then start moving. This is the high volume node that we have within this period on the altimeter. Once you get through there, possibly you can get some beneficial upside with this. The other one was, I'm going to look at just the airlines in general. This is the Jets is the ETF for this. We talked about this range. Tried to get above there, down about 4% today. You got a little bit of an area of nothingness here. The aileron is starting to come positive, but not, I would not say in a great way. Still seeing consolidation across here. There's a lot of concern about the airlines. You know, just not looking great by any means. Not looking great. Gilead, the one that came out with the drug, down about 2.5 today. Stock has been kind of ranging in this area of about 86 down to about 75. 75 looks like a pretty good level of general support on this. They came out with earnings last night and kind of moved down a little bit into this. Amazon, I don't think anybody should be really too upset about taking down 4%, which was the up they had yesterday. They did get to an all-time high, just about breaking out yesterday, got into a green level. Confirmation, now falling back down at 23, what is it, 23.68, which is right on our level of support right there. Again, Amazon's got to watch out. Anything below that, this can really drop down. Look at that radar that we show you here. That's a B. See that B? Inside of the B is where your problem is going to be. You got resistance and support here, resistance and support down here. And then when you take the B and you draw that, if you want, I'll draw it for you. I'll kind of just highlight it here. Here's the B, right? There's your big B. And with that big B, what that tells you is that the range inside of the B, here. Right there. That's the important range. That's a mess. That's the important range you need to look at, right? Kind of right inside of here. That's the fat of it. Inside of there, you have, look at this big move that you move up. The potential for it to move against that on the downside is very, very real. So you need to be aware of that if you are a long holder. If you're looking to go short, and if you have that within you, I mean, I think that possibly you have an opportunity right about below 20, I would say 2,300 is a shorting opportunity. If you're playing the insides, what I mean by that is you're going long on the bounce on the level of support, and you're going short on the level of resistance. You know, now is a good time to do that. Watch for that level, 2370 if we could hold. Let's get the exact level here. 2372. We're a little bit below that in the pre-markets, so look for that to hold. Let's take a look at this. Somebody's asking me about soybeans. Soybeans. All right. I like it. We don't get many soybean holders out there. The beans. Where are we on the beans? Well, the beans have been, let's take away let's look at the long term here. Let's kind of look at this on a weekly basis. Soybeans. Yeah, good news. China is going to purchase a massive amount of soybeans in the deal that we cut. What a crock of crap. I mean, this is not China buying immense amounts, billions of dollars of soybeans. They use a lot of soybeans. Think about the products that they use soybeans for. A lot of soybeans. They promised us they're going to be buying billions and billions of dollars from our farmers. Come on. That was all a load of crap. We talked about the trade deal at length here, right? Talked about it on the Disciplined Investor podcast. We talked about it on DH Unplugged. What a load of crap. It was just a signaling that we got something done with no teeth in it at all. Let's be frank. Here's the result. Here's the proof. It's right here. As they say, the proof is in the pudding. The proof is in the soybeans. They did not buy anything. They're not pushing prices up. And even though people are still eating around the world, we're hitting on a multi period low. Let's go monthly. Let's look at this monthly. That is a direct train down to nothingness. That trend is very clear. Look at the aileron. The aileron is in a downtrend. So let's go back to daily here and take a look. Where are we? Well, we're range bound inside this level here. I would like to see beans get above about 866 and a half or so. Let's call it 870. 870 before we see anything significant. There really is no good pattern right here. We're seeing a little bit of reversal off of the lows, but that's simply that, off of the lows. So good. Thanks for the soybeans. I appreciate that. Want to talk about corn? How about corn? Let's look at corn. Corn's been in a downtrend on a daily basis. Let's look at it on a weekly. Terrible downtrend. Look at this great trade you would have had. Corn shorted about 380 down to about 309 right now. Once again, the aileron is confirming all this, but you had a major amount of support here, then drop off. Now, mind you, some of this is due to the fact that restaurants are not buying, and there is a significant amount of change. I mean, look at the potatoes that are out there. There are, as far as I'm aware, there are no potato futures. But I don't know why they're not making more vodka out of it. They're just letting them rot right now. But the same thing is true about corn. I mean, but we can go back, right? We can go back looking at corn for this is well before the coronavirus. I mean, we just couldn't get anywhere. It's not like we're eating less. It's just that I guess the demand is just not there, or the crops are really good. So right now, the crop side of things is not so good. Somebody has a question about GDX. We talk about GDX, by the way, not Nugget, N-U-G-T. And the reason for that is that we want to use the core. We want to use the baseline of the underlying positioning to give us an idea of where we are. So if you want to buy Nugget, which is a multiple leverage ETF, what you do is you look at GDX. GDX looks like it's a little bit weak right now. It looks like it could come back down to the 30 range from about 32, currently trading about 31.48, in fact, in the pre-markets. Please do me a favor. Subscribers, you get a 4-hour free video coaching session online. If you haven't subscribed, there is a 10-day free trial over at the TradeStation Trading App Store for TriggerCharts, the number one indicator, the number one rated indicator of all indicators on the Trading App Store for a really good reason. It works. So do me a favor, if you haven't got it yet, by the way, you can open up a TradeStation account. I think with a minimum of $5,000, Don't have to trade it. Get the platform for free. And from there, you can utilize all of our indicators. Thanks a lot for joining me, and I'll see you again next week. So be safe, be profitable.